Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel I try to keep crypto real simple. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button or follow me on Twitch. We stream every Monday and Friday around this time, but today's different, so I might be hitting a different audience today as I am streaming early because there is a meetup. So if you are in the LA area and you want to come hang out with some crypto enthusiasts, we will see you at 4 o'clock at Eureka Bar and Grill in Hawthorne area, kind of just a meeting place in the middle. So if you are interested, see you there at 4. So in today's video, let's take a look at Bitcoin. I want to take a look at the market health, Bitcoin dominance, take a look at some of the higher market cap alts, and then see where we're doing in terms of overall structure. And then I want to talk about a few projects that I think are very innovative that could use a little bit attention. So without any further ado, let's dive into it. Let's take a look at the king of all crypto, and that is Bitcoin. Taking a look at Bitcoin on the daily, we are struggling to hold this little area right here at around $64,000. We're in a consolidation. You know, a lot of people calling for downside targets. There seems to be more bears than bulls currently. Whenever we have an extension, the price action is always going to extend, consolidate, or retract and consolidate. There is a move, a consolidation, a move, consolidation. So we had a move up, and now we are simply consolidating. So just because we're at an all-time high doesn't necessarily mean that we have to head down to lower levels. It simply means that we're consolidating, trying to decide upon price. So what I would be looking for a bullish break is any kind of move above, let's call it 66. If we can get a clean break above 66,000 on volume, I think that will be a good signal that we have a continuation. However, if we do start breaking down below $60,000, getting into that 59, anything below 60, that psychological 60, we could be entertaining some ideas where we could be looking at a retrace around 53, 52, maybe even $51,000 in Bitcoin. But my bias is bullish. My bias is continuation to the upside. We're in a consolidation in a bullish context at an all-time high. I'm going to pick the side of bullishness. Now, for the bears out there who are looking at this chart, we do have some negative characteristics in the chart right now. If we take a look right here, we have some possible bearish divergence developing. Let me get rid of that extended line right here. So you can see we have a high, we have a higher high, and then when you take a look at the RSI, we have a high, and then we have a lower high. Now, the thing about bearish divergence in a bull market is those ideas can become invalidated. So a lot easier, they can become invalidated a lot easier than when looking for bullish divergence in a bull market. Bearish divergence in a bear market can be your best friend, but when we're in an uptrend, when we're at a macro higher high, higher low structure, you kind of need to realize that, you know, we have a potential bearish divergence right here, but all it would take to invalidate that idea is a move of the RSI past the 80. So if we start to move, if we start to head to higher levels and the RSI makes it past the 80, well, now that bearish divergence is invalidated. So, you know, a lot can happen with these divergences. A lot can happen on the daily chart. A lot can happen on the weekly chart. And these divergences take time to confirm. They take time to play out. But we do currently have this divergence in these two indicators here, price and relative strength. So be on the lookout. There is a case for the bears to be bearish right now. What I would be looking for as a precursor for the invalidation of that is if we do get the RSI break past this resistance. So if you see RSI back up at around 66, 65 in the RSI, and that correlates with a break above $65,000 in Bitcoin, I would anticipate that momentum would overtake. I would anticipate that volume would come back in, and we would be, you know, heading into a new all-time high. So be on the lookout for that. We're still neutral as we are consolidating. So Taking a look at Bitcoin dominance. Bitcoin dominance is the relationship of market cap in Bitcoin versus the rest of the crypto market cap. So it's Bitcoin versus everything else. And when this chart is trending to the downside, it's typically signaling that there is more market cap dominance going towards the altcoin sector. We are trending to the downside. We kind of got a rejection here at the last resistance point here, so that's good. But this is all good for altcoins. Again, the true altcoin season is going to begin below 40% dominance. If we can start trending below 40% dominance, things are going to be looking really, really good. And it's kind of a lagging indicator. By the time we get to 40% dominance, it'll already feel like alt season, but that's that final confirmation that you would be looking for. A little bit of late coffee today. Yeah, so let's take a look at some of these higher cap coins. I've got Polkadot here, just logged up here, ready to go. We can take a look at Polkadot real quick. Polkadot's got some nice trading activity coming in, holding and defending the all-time high as a retest. Little bit of a bullish divergence occurring here. You can see that we have a ascending highs on descending lows on the RSI. There's still a little bit of room. We could come down and test the 40 range of the RSI here on Polkadot, at least in terms of this chart on the perpetual futures contracts on FTX. Let's take a look at Cardano, so ADA USD. Everybody's favorite useless coin. Let's pull up the Coinbase chart. Actually, where do I have some data on Cardano? Kraken. Still defending this very critical level, I think, in terms of price structure and performance in Cardano. We got to stay above $2. If we start falling below $2, well, then this coin is going exactly in the direction that it deserves to go, and that's down. I do not think that there is enough infrastructure to justify the current valuation of Cardano. Breakout here as we broke the downward sloping line of resistance. You can see that the volume overall was really, really low. We're seeing that as a trend overall inside of Cardano. You can see this declining volume. We need to see the trading activity pick back up. If trading activity can't pick back up, then it's not looking good for Cardano. There's not a lot of intrinsic value or use case for the Cardano ecosystem just yet. They're still in the development stages of building out their offerings. So that could be part of the reason that the volume is so low and pitiful inside of Cardano. Taking a look at VeChain. VeChain's looking actually not too bad. I'm liking where it is in terms of its volume. You can see the buildup in here. You can see the buildup of the trading activity from the buyers and the sellers. Broke past the previous resistance here, sitting on top of this channel for support. It's looking like there is a possibility of continuation, so watch for the volume and watch for the breakout on this one. Next real resistance inside of VeChain would be the all-time high right here at around 28 cents. 28 cents. So be on the lookout for a break above there. Let's catch up with the chat, see who's in here. Liquidated Shorts, good to see you. Martin Corey, oh hey, it's been a while. I don't think I've seen you in the chat in a while. Raged Yeti, how's it going? Rob Shambi, Distance Reiki Healer, namaste. If you have time, could you please take a look at 1inch? Yeah, let's take a look at 1inch, and then I want to talk about DeFi 2.0. DeFi 2.0, because things are getting really very innovative in DeFi, and I'm quite excited with a lot of the stuff that's happening right now. No, why you keep trying to change the interval? I'm trying to change the ticker. Oh, it's because it starts with a 1. I always forget that. All right, let's take a look at 1inch. Let's go with the FTX chart. 1inch FTX. Yeah, we had this crazy sign of strength move. We're coming back down for our backup here. Quite a volatile range. The use case of 1inch is kind of I don't really know what you need the protocol token for. I believe there is some sort of incentive model. Maybe there's some sort of kickback rewards if you are holding, or there's a savings on gas. I'm not really familiar with 1inch, the protocol, in terms of the demand on this token. I am a sushi swap guy myself. But yeah, the chart's looking decent. This is kind of interesting though. A hell of a lot of supply came in here that you know, just came out of nowhere. So there was just a ton of volume that came in here. We basically got the RSI all the way up to 80, and just a shit ton of volume came in. So kind of concerning. Don't really know how liquid this asset is. We got a few more weeks. Do you like Luna? And also, how high can Matic go, you think? I think that love it, hate it. Listen, I get the fees. I spent just recently over $200 for an Ethereum gas fee. You know, it's broken. I get it, but it's the most innovative space. It's where all the devs are working. There's a long-term vision on Ethereum, and all of the true innovation is coming out of Ethereum. Luna is doing something very interesting, which is synthesizing all of these different fiat currencies so that you know, traders from around the world can enjoy a stable coin in a cryptocurrency in their local currency, which is great. But it needs to plug in with Ethereum. We need to see more integration with Luna coming into the Ethereum ecosystem for me personally to get excited. But the collateralization model, I do, pretty difficult if you're trying to swing trade this thing. But if you're an investor in Luna, this is still looking all right. It was kind of getting a little messy back here. You can see the volatility was quite, you know, we had high volatility in this general area, but that seems to be subsiding and calming down. The one thing that I'm not liking is just the overall trading activity. So volume is decreasing quite a bit. This could say that we have kind of, you know, reached an equilibrium in terms of the value and price, but I do think that Luna had a heck of a run up. And I would lean, I don't know, I just, for whatever reason, I'm leaning bearish on Luna. I think that there is room to the downside on Luna, and I don't really like the fact that it's not available or Ethereum compatible in its current form. So for those reasons, I'm not an investor in Luna. And from a technical standpoint, I find there's just too many variables and too much volatility for me to be able to pick an appropriate side that is going to work on my you know, it's not really going to give me too many advantages. I'm going to find myself picking the wrong side a lot on Luna. So if you're a long-term holder and you're buying spot and you don't have liquidation risk, I think that it's still kind of fundamentally a sound project because it's unique. Uniqueness is really important. Heading up and to the right. That's what you want. So not a bad one. Surprised we haven't had a leverage flush. We've had a couple little ones, but yeah, nothing huge. Now Thanksgiving week, traditionally been bullish, yes, because this is the time where families meet and you get people shilling projects and actually showing people hands-on how to buy, how to stake, how to do whatever. It's typically bullish in North America to have those people, you know, families come together and explain things, so you do get more market participation to the long side. Talking about DeFi, thoughts on Solend. Yeah, let's take a look at Solend. Solana, it's impressing me less and less. I don't know. It's a temporary thing. I don't really care about Solana long term. I think it has a place, but Ethereum is ultimately going to win, in my opinion. Let's take a look at Solend regardless. It'll have its place. I think Solana is more so gearing towards traders and not so much about the lending market. Solend is an autonomous interest rate machine for lending on Solana. So this is, you know, it's a copycat of Compound or Aave or, yeah, those are the two main lending protocols on Ethereum. Let's go into the, how do I connect? Where's the, sorry for the background noise. There's apparently some 12% on USDC. You can get 14% on USDT. I like that this is single stake, you know, like a lot of these other lending protocols, you know, single stake, you don't ever have to worry about impermanent loss. But yeah, you're getting pretty high yield for Bitcoin though. That's a pretty high yield for Bitcoin. 4.1% on Bitcoin. That's pretty darn good. That's enticing. Serum, yeah. 38% on Ray. Wonder what the deal is there. So yeah, I mean, if you're in the Solana ecosystem, by all means, participate. Most of my lending capital, most of my stablecoin stuff is in the Ethereum ecosystem. I do like Solana for NFTs, and I like Sol, the token itself, as an investment. I think that Solana is a good investment, and it's a good token to hold for the duration of the run. But yeah, it's I don't have that on Solana. Protocol looks good. I don't know. How long has Solend been out? SLND. SLND. Brand new and tanking. So, you know, this is very typical of a new token distribution. Token launches, there's a launch price, there's a dump, there's an accumulation. So I'd wait for the accumulation to begin on this one. I actually really like it when tokens dump on launch. When they start going up vertical, you never really know if they're going to keep going or not. But when they dump, they usually dump into an accumulation period. So typically what you get on these dumps is, you know, you get the protocol launch, it dumps, it'll dump into an accumulation period. And that's what you want. You know, you want to plant your seeds in the ground as it's flat. Harvest when it goes vertical. So that's preferred. When they launch and they just keep, when they launch and they just keep heading up and to the right, you don't know if you're buying into something that will dump or if it actually is sustainable. So when they dump, that's great. I like it. It's much better. The governance, what do you need it for? That's for you to decide. Typically governance tokens, I don't usually recommend. However, with the up and coming infrastructure of all these decentralized autonomous organizations that are owning their own liquidity, there is more and more of a bull case for these governance tokens to have a value attached to them as the DAOs begin to fight over them. But those DAOs, that DAO infrastructure is nowhere near as developed in the Solana ecosystem as it is currently in Ethereum. Speaking of DAO infrastructure, that's kind of a topic that I wanted to talk about today. So there's some pretty interesting protocols that are out in DeFi land right now. I've talked about this one a few times. Ohm. Ohm has brought a really interesting vision to DeFi, and that is protocol-owned liquidity. It's a revolutionary idea, in my opinion, in terms of DeFi, because you create liquidity that never leaves. You create the ultimate market maker. You create, you know, pools of liquidity that you will constantly be able to draw from. This is really powerful, and the idea of rewarding stakers in a protocol that owns its liquidity, where the liquidity is going to work in different areas where they can provide a yield and make a profit. It's really exciting to me. Now, what that means with the actual token, the Ohm token, and what that means for you as an investment will have to be something that you need to decide on, because it is kind of an interesting token. It's a rebase token. They keep issuing new tokens. It's currently paying an APY of 8,000%. Now, that sounds enticing, but you also need to keep in mind that that is also the inflation rate. The inflation rate is over 8,000% per year, which is not good. It's dilution of the supply. The ultimate goal of the Ohm token is to become a reserve-backed asset, a backed asset reserve currency. But in the short term, what that looks like to your portfolio is going to have to be something that you need to decide on your own. Another project that's actually quite interesting for those who are wanting to provide liquidity but still control your tokens. When you provide liquidity to Ohm, it's a one-way street. It goes in, it doesn't come out. You get Ohm tokens, but you're never going to be able to buy your liquidity back, ever. It's not a staking system. It's not a liquidity provider system. It's the protocol now owns that liquidity, and it's never sold. It never goes anywhere. Tokamak is another decentralized autonomous organization that is offering you a plethora of ability for single staking. So a lot of people who provide liquidity, they find themselves in certain circumstances where they need to do an ETH pair. If you're on Ethereum, you have to do an ETH pair. If you're on Matic, you have to do a Matic pair. But you provide liquidity for a certain token and you receive rewards. Tokamak is actually organizing all of the pairing as a DAO, and they just want the liquidity. So they're rewarding you for single stake. So if you have some sushi tokens and you just want to receive a yield on sushi, you don't want to get a yield by farming sushi tokens on the LP on the decentralized exchange, then you can just take your sushi tokens, put them into Tokamak, and Tokamak will take care of the bonding of those pairs. This is nice because you don't need to worry about impermanent loss. Tokamak is taking on the onus of impermanent loss. So your ability to predict an APY is a lot clearer because it's not diluted with two different tokens that are appreciating at different rates. So for those who have always wanted to stake but never did so because they just didn't want to experience impermanent loss, Tokamak is something for you. Another one that I want to take a look at or just bring to your attention is Liquidity. So Liquidity currently does not have a dApp. It is a back-end infrastructure. This is something similar to Serum in how Serum doesn't have an app. It's all just back-end work on the Solana ecosystem. But what Liquidity does is it is a protocol that offers zero interest loans. I'm getting tongue-tied to it today. Jack up the caffeine, that's what I need. Zero interest loans, that's something that's going to be very appealing. And this is just more to like the incredible infrastructure that's being built in DeFi 2.0. You know, we have projects like Liquidity, where you can get a loan at zero interest, and what a Liquidity holder receives is you get a share of all liquidations. Imagine if you could hold a token that gave you like a portion of the liquidations at Bybit, or a portion you get to capitalize on all of the liquidations that happen in the market. So kind of an interesting coin that you could add to your portfolio as a bit of a hedge, or just, you know that liquidations are a profitable venture, so may as well get exposure to that. An interesting project. And another one that I also find quite interesting that I've talked about here a few times is Alchemix. Alchemix is another lending protocol. This is a staked collateral. For you to borrow, you need to stake collateral, but this offers no liquidations at all. So you can borrow money based on something that you have provided. You've provided liquidity to the protocol. You get to borrow money and there's no liquidations attached to that. Sound too good to be true? But wait, there's more. The loan will actually pay itself off because the collateral that you posted then goes to Yearn Finance to receive a yield. The yield that it receives on Yearn goes back to pay down your loan for you. So if you get, if you take out money and you lose it all because you're the worst trader in the world, the money that you posted inside of Alchemix eventually will be unlocked and eventually will be released to you because of the fact that you're able to, the loan pays itself off. So pretty interesting stuff, again, going on in DeFi land. So go ahead and do your own research and take a look. We are no longer at the point where we are creating an alternative banking system. We are creating a banking competitor that's pretty much made all of these products that if the general public knew about these products, banks would be done. They would be done overnight. Nobody would use them anymore because the banking, lending and borrowing market is so predatory. And here, it's just everything goes to the user. All right, let's catch up with the chat here. I like Sol too. I think, it's a really good project to have exposure to this cycle. The long-term staying power of Sol, I think Sol will find its niche and it'll find its use case and purpose, but I don't think that it's going to be a DeFi powerhouse. I think that Ethereum will always maintain that. The only thing that's going to take away market share of DeFi from Ethereum is Bitcoin. And it's not a popular opinion, but it's my opinion. $8 to $10, good entry on Sol End, apparently. I mean, not while it's plummeting. Just wait for it to come to a floor. I mean, he's basing that on absolutely nothing. He's basing that analysis on nothing. It's too new. You know, I can pick any arbitrary number. Okay. Can you take a look at Teller and see what would be the full extension of the fibs and where you see it at the end of the month? The stream's frozen? Get used to it. That's my brand. Frozen streams and lost frames. That's how I roll. Luna's burning coins like mad too. Well, they burn. That's part of their mechanism. What do? They burn when they need to match collateral or something. I don't know. I don't know Luna well enough because it's not part of, you know, the Ethereum ecosystem. It's not Ethereum compatible. So, you know, my research is lacking there. Okay, so Teller. I don't know what Teller is. Teller on shitcoin exchange. Trending in the right direction. What does Teller do? Yeah, I like this. You know, not super aggressive. The volume's kind of sustainable. Yeah, this chart's not bad. What does Teller do? I just don't like what exchange it's on. It's available nowhere. TRB. Oracle. Okay, so with oracles, oracles are tough. I'm not convinced we need all these oracles. I think like Chainlink has it down. Everybody uses Chainlink. Most developers use Chainlink. We haven't reached kind of a capacity issue with Chainlink. So I'm not sure. I don't hold any Oracle projects. I don't hold any oracles. I'm just not sure as to, I don't know enough about how they work. I know that they're required for devs. I'm not a developer. I don't know the demand structure of Oracle tokens, but we can take a look at TRB. And it's trending to the upside. I mean, that's the best that I can do for you. Yeah, it's on a nice red day. Today would probably be a good day. I'd be a buyer today. It's got a nice dumpy candle. So, you know, 7% down, go for it. Why not? Which tokens on Avalanche do you think can do well? The good ones. I don't know. I don't really care. You know, everything's a copycat. That's the thing that kind of, you know, it's just you're copying ideas that come from Ethereum, which is where all the innovation is coming from, and then you're making gas fees cheaper, which is fine. You know, I'm not saying that that's a bad thing at all. Just it's up to you to notice the trends. I'm not messing around with Avalanche. I don't know. You know, I hear Joe is good, which is their AMM, but you kind of want to just look for more yield-based opportunities in these alternative assets, because the true kind of like venture capital and the opportunities of an innovation, from what I see, I've been in the space for a while. Every time something is new, anytime there's a new concept, the new concept is coming from Ethereum. So, you know, I get it. Ethereum's expensive. Nobody wants to use it. But if you want to be an early adopter of a new concept, you're going to end up holding an Ethereum token. In Avalanche, what does well in Avalanche is wherever the yield opportunities are. So you need to look for the APY, you need to look for certain tokens that require you to buy whatever, XYZ token, whatever it is. And you need to look for the opportunities inside of that ecosystem. Where are people getting a deal and how are they getting that deal? Those are tokens that typically do well. As far as the finer intricacies of Avalanche, I'm not sure. I kind of look at Avalanche as a way to just get a break on fees when there's something really interesting inside of Ethereum and I want to just take it to a side chain. So Aave is integrated with Ethereum, or Aave has integrated with Avalanche. So if I wanted to do some lending on Aave, I would choose Avalanche or Polygon. But as far as the projects like built on Avalanche, it's usually just Ethereum compatible copycats. So I don't know. Avalanche. If people are using Avalanche, choose Avalanche. Choose the track, not the horse. Can you calculate the APY on Yearn Finance to pay back the loan on Alchemix? You can actually, Alchemix has a loan calculator built into it. Alchemix. I think Alchemix is just a game changer. Absolute game changer. One of the most exciting projects in the space. Look at how many people use leverage. Look at how many people use leverage. Look at how many people get liquidated every single day. And how often do you hear about Alchemix? How often do you hear, oh yeah, just come over here? There are no liquidations. It's such a cool protocol. There's no liquidations. Borrow money, make degen trades, don't lose your money. So you go to the loan estimator right here. DAI, APY is like 20%. It's really high on DAI. So let's say you put in, 10 grand in here and you borrowed 5. With the loan calculator at the current rates, if the current rates stayed constant, which they don't, but let's just assume that they stay high, your loan would pay itself off in May 2024. Let's say you only borrowed $1,000. That loan would pay itself off in May of 2022. So try this out. That's the loan calculator. Stablecoins right now, specifically Tether. Everybody's terrified of Tether. Everybody's freaking scared shitless of Tether. So what mstable does is it is a pool of liquidity where you can put any stablecoin you want. Well, that's not true. You can't put any stablecoin you want. Right now they accept Tether, they accept USDC, they accept DAI, they accept Frax, and there's going to be more as more of these stablecoins are created. You can put it in the pool. Your representational share is you're minting a new coin called MUSD. MUSD is 25% DAI, 25% Tether, 25% USDC, 25% Frax. So if Tether fails, it holds 75% of the value. Okay, cool. I didn't lose all my money on Tether. I only lost 25% of my value on Tether. Now, the mstable token, the MTA token, is used as a recollateralization asset. So if Tether fails and you're holding mstable, or you're holding M tokens, the treasury will then split the difference and they will make up for the loss, and they will be a free 30 days in the group. We talk a lot about receiving yield in DeFi, trading setups, different coins that I'm in. We have a very active community of traders. We have a lot of these kind of deep dive analysis videos, as well as the virtual classroom, which am I late for? Am I late?